I found the liquidity strategy that will make you money inside of 2025. And inside of this video, we'll be breaking the strategy down into 3 separate chapters that you can follow through and understand it fully. This strategy starts off with a higher time frame market structure. So on the 4-hour through the weekly time frame, we want to be looking for the overall structure of the markets. Here I have gold as an example. We can see that gold was making higher highs and higher lows on the 4-hour time frame. And then we can see here that we started breaking structure lower, and now we are making lower highs and also lower lows. So inside of this type of market condition, we would mainly be looking for sells, while here we would mainly be looking for buys. Inside of an uptrend, we want to mark off our higher highs and also our higher lows. See how the market made this higher high right here, and then also we dipped down and made the higher low. Same thing applies when we are in a downtrend where we make lower highs and also lower lows. The next thing that we want to pay attention to is our session-based liquidity. The main sessions we pay attention to are Asia, London, and New York. A lot of the times Asia will be in a range, then we will either see a manipulation of Asia in London or New York. And sometimes we will see a manipulation of London inside of New York alongside Asia. There are multiple different ways that this sweep can happen, and there are multiple different ways the sessions can be manipulated. So to get your sessions, you want to go over to indicators and type in sessions. Go over to where it says sessions, which is this one, and then it'll go to your automatic sessions of your time zone. This white part is Asia, the yellow for me is London, and then the orange and pinkish are both New York. So for Asia, we want to mark off both the highs and the lows of Asia, and the same thing for London, where we want to mark off the highs and also the lows of London. Here's another example. We mark off the highs and lows of Asia, and then the highs and lows of London, and we can see New York cleanly manipulated both London and also Asia. Now the next thing we want to pay attention to are our previous day highs and also our previous day lows. These are important areas of liquidity as well. This one candlestick is all you need. This is the daily candlestick. It marks off the high, open, close, and also the low of day. The high and low of day are super important because there is liquidity, like I said, above and below those areas. So to mark off the previous day's high and low, I usually just go over to the day's candlestick, and we mark off the high and also the low of that previous day. As you can see, this red candlestick was the previous day, and then we go back down to the lower time frame. You can see something really cool here where you see a bounce off of the previous day's low inside of this area lower. So previous day low and high can act as important areas of liquidity, like I just said. Let's go to another day. Go to this day. Go to this day right here. I'm not really too good on drawing them out, but this day we didn't really get a break until later on in the day, but we still use that previous day as kind of like a support. So previous day high and lows are as important as session based, but we'll primarily focus on session based liquidity. Previous day high and lows are important as session based liquidity, but we'll primarily focus more on session based liquidity. The next important part that we look for is our supply and demand gaps. So the way I trade supply and demand is I mainly look at the 15-minute, the 1 hour, or the 4-hour time frame, and you want to be trading supply or demand zones that have a gap attached to it. Then later on, when price comes back to that zone, we then get in and ride price higher. This is the first example of it on the 4-hour time frame. Usually the higher the time frame, the more reliable the zone. See how we had this demand zone? We were buying. This demand zone had broken above this structure, which was right here. Next, we come back into the zone. We fill in the gap, and then we reject from that gap for the rest of the day. Until of the next day, of course. Here is another example of this happening with this supply zone, which was right here. The supply zone had a gap attached to it before this green candlestick came in to fill it. It broke structure below this low as well. Price comes back to the zone, wicks it, and then we reject. If you go to the lower time frames like the 15-minute, there's a very clear entry right here. Could have gotten in, held all the way down. Here is another example of this happening on the 4-hour time frame. This is actually a trade that I took a while back, back in the beginning of this month. Price had this demand zone, had broken above all this structure, had a gap attached to it as well. We then fill in the gap and then reject. See, this is a 4-hour candlestick, so the rejection doesn't look that big, but this was a good 1 to 2, I think. The next day too, there was another setup that formed. Similarly, there was this demand zone next. We had this gap attached to it, come back into the zone, and then we reject for the rest of the day. Now, if you want to learn my model even more, you can join my free Discord. The link is inside of my description. Just a free community. I do give out free signals. And if you want to be a part of my private community as well, we have our mentorship right here with a 7-day free trial. I already have some of my members already catching trades, and he's only been in it for about a week. So if you guys are interested in both the free Discord or free private group, link is inside of the description. So now that we have gone over all of our important chapters, chapter 4 is just about putting this all together. Our supply or demand zones along with liquidity. So I'm going to go back to the first example that I marked off. We already have our sessions marked off. You see Asia highs right here, Asia low, London high, and also London low. We go to the 4-hour and we see that same demand zone that we had marked off from earlier. We then go to the lower time frames. Price taps into our zone for us to enter and also get inside of the trade. Now my main target would have been Asia high, but I also know it was the end of the day almost, so I knew it was a possibility we weren't going to go back up there, especially because now the market looked like it was starting to switch. But you could have still caught some points off of this trade. In the other trade example that we went over, it was the same thing. We had this supply zone. If you look very closely, where did we wick above? London high. We then gather the momentum to switch around. We get inside of the trade. We get inside the trade now, and now we're aiming for what we want to aim for, and we're up for the rest of the day. The same thing applies right here, where we see that break above. This is the demand zone, broke above this structure. We then come back at this specific time. We see that we have Asia low right here, along with London low, Asia high up here, and London high. New York comes, we manipulate exactly at that point into the zone, and after we reject, and now we're going higher for the rest of the day. The same thing applies to this 4-hour zone as well that we had marked off from beforehand. On this Tuesday, we manipulate below London, literally to the T. Then we already had taken out Asia inside of London, and then we reject for the rest of the day basically. But we do come back, but you would have earned some good points if you would have closed by the end of the day. Now, this bonus chapter is all about context. And by context, I just mean situational awareness about every stage of the market is important when you're trading this system. Since we are looking at higher time frame zones, knowing the fundamental themes of the market is very important, like who is the president, if there's news on that day or not, or things like that. And our edge becomes even more effective when we combine all these things into our system. An example of this would be this huge sell-off that we've been having on gold. So fundamentally, this huge sell-off happened because of Trump's words on tariffs. Investors are now spooked and want to invest in more safe haven assets. Knowing this and combining it with our system, we can kind of know that there will be selling for a while, and it also helps us leave runners and let our trades go along with the fundamental theme of the market. The same thing with this huge buying that had happened. all the way up here before Trump even came into office. There was a lot of fear, a lot of uncertainty. Gold went higher because gold moves a lot based off of fear. Knowing this, getting inside of our strategy, I can even see a trade right here where we could have held a huge runner just knowing the theme of the markets. So knowing your fundamental themes are very important. So I hope you guys enjoyed this video. Let me know if you're able to put this strategy together, not only on gold but on other assets as well. Let me know if you have any new video ideas inside of the comments below, and I will get to you as well. That's it for this video, and see you guys next time.